Dear shareholders, Reliance continued the tradition of setting many new records in terms of its achievement in the past year. Our earnings before taxes and net profits were both the highest in the company's history. Our capital expenditure in the year was in excess of 100,000 crores. This is not only the highest capital expenditure by us in a year, it is the highest by any Indian company ever in a year. We raised the highest amount of debt capital at very competitive costs to finance our growth. We improved our credit ratings internationally, which gave us continuing access to public debt markets. We are amongst the 10 most admired companies in India to work for. Dear shareholders, Reliance continues to be a significant contributor to national exchequer. Reliance is India's largest exporter, accounting for almost 12% of India's total merchandise exports. We exported products worth 228,000 crores to over 120 countries during the year, a testimony to the quality and competitiveness of your company's products. Reliance paid 18,746 crores of customs and excise duties during the year, which is almost 5% of India's total revenues from customs and excise duty. Reliance is also the highest income taxpayer in the private sector in India and paid 6,124 crores as income tax during the year. Dear shareholders, I will now share with you the progress of each one of your businesses. Petrochemicals. Our petrochemical business consists of polyester, fiber intermediate, polymers, synthetic elastomers, and a variety of chemicals and solvents. We are the largest integrated polyester manufacturer globally. We are amongst the top 10 producers globally of paraxylene, PTA, MEG, and polypropylene. We are the largest producer of synthetic elastomers, that is rubbers, in India. Our petrochemical business adds value to our refinery stream and is focused on improving quality of life of millions of Indians. Petrochemicals business meets the raw material needs of over 30,000 small and medium scale units directly. This supports India's manufacturing growth and generates employment for more than 4.5 million Indians. This business demonstrated robust performance in challenging conditions, primarily due to the integrated nature of our operations and world-scale capacities last year. We continue to strengthen our global polyester leadership position by increasing capacity and continued focus on operational excellence. Last year, we commissioned a fully automated polyester plant at Silvassa with a capacity of around 400,000 tons a year. We have brought on stream a 1.15 million tons per year PTA plant. We will be ready for startup of the next 1.5 million tons per annum of PTA at Dahej by October of this year. With this, our total PTA capacity will be 4.5 million tons and make us the 5th largest PTA producer in the world. Our world-scale paraxylene plant will double in capacity from 2.1 to 4.2 million tons per annum and will be ready for startup at the end of this financial year. With this expansion, we will be the 2nd largest paraxylene producer globally. In our plastics business, we are building a world-scale 1.5 million tons ethylene cracker at Jamnagar. This will be ready for startup in the 3rd quarter of the next financial year. This world-scale cracker is unique and it is entirely based on 100% refinery off-gas as feedstock. We are building this cracker at a significantly lower capital cost to our peers in North America. This cracker complex is conceptualized on full integration from feedstock to downstream derivative capabilities. The products from this cracker will meet increased domestic demand, save precious foreign exchange, create additional employment, and provide a fillip to value-added exports. In order to enhance the competitiveness of our existing ethylene crackers at Nagotne, Hazira, and Dahej, we are working aggressively in creating infrastructure for transporting feedstock, ethane, from the US to India. We will be the first to execute this globally at this magnitude and scale. This facility will be ready for startup by December 2016. The sourcing of ethane and integration with refinery will result in feedstock security as well as optionality in feedstock usage and will significantly improve the earnings potential of our integrated plastics business. India is fast emerging as an automobile hub with resulting growth in rubbers and elastomers demand. We have strengthened our elastomers and rubbers portfolio by commissioning 150,000 per annum synthetic butyl rubber capacity. This is on top of the expansion of the PBR capacity of 115,000 tons per annum last year. All these petrochemical investments are generated to deliver superior performance in the years to come by focusing on capital cost competitiveness, continuous cost reduction initiatives, and operational excellence. These will strengthen the government's Make in India initiative, as each of our petrochemical venture provides raw material to tens of thousands of downstream processors that provide livelihood to millions of Indians. Petroleum refining and marketing. Refining and marketing continues to be a significant contributor to Reliance's profitability, delivering strong financial performance during the year 2014-15. The market environment last year was extremely volatile and challenging, witnessed by an oversupply in crude oil market that led to a crash in oil prices by over 50% after remaining stable for nearly 3 years. Amid such an environment, Reliance posted a gross refining margin of $8.6 a barrel, outperforming the Singapore benchmark yet again with a premium of $2.3 per barrel. The Jamnagar refineries processed 480 million barrels of crude at an average operating rate of 110%, which is significantly higher than our regional and global peers. Reliance maintained its global leadership in all critical benchmarks, achieving top decile performance in energy efficiency, operating and maintenance costs, and on-stream factors. The Jamnagar refineries processed several new challenging crudes during the year, taking the total number of crudes processed to 144. While Reliance continues to enhance India's energy security, significant quantity of our products are exported to world markets. The financial year saw deregulation of diesel in India, opening up an opportunity for Reliance to re-enter the domestic retail market. We will now once again be able to offer Indian consumers a unique, high-quality retail experience through our value propositions. We plan to recommission the entire network of petroleum retail outlets by the end of the financial year 2015-16. Currently, close to 400 outlets are operational. Our aviation fuel stations present at 25 airports across India fuel an aircraft every 5 minutes on an average. Our current portfolio integrates the entire value chain from procurement of crude oil all the way to end retail customers. We are now implementing a coke gasification facility at Jamnagar, which is one of the largest clean coal initiatives in the world. This gasification project is based on contemporary technology and is the largest of its kind in the world. It will convert low-value petroleum coke to a clean energy source for our refining complex, thus rendering Jamnagar energy self-sufficient as well as enhancing the profitability significantly. We expect the gasification project to be ready for startup in phases starting from early 2016. Upon completion, the project is expected to save nearly $1.5 billion annually by substituting imported LNG with the gas produced by it. The hydrocarbon-rich refinery off-gases freed as a result of this project will be utilized as feedstock for our petrochemical plants, thus generating significant additional value for your company. Gasification shall further enhance the uniqueness of Jamnagar refinery's path-breaking configuration as one of the iconic refineries in the world and sustain our global leadership in refining and marketing business. Oil and gas exploration and production. Dear share owners, your company is a pioneer in deep water exploration and production in India. We discovered India's largest gas reserves in the deep waters of Bay of Bengal under the NELP. Within a short span of just 2.5 years of the D26 discovery and 6.5 years for the D1, D3 discoveries, we have brought the two challenging deep water fields in the KGD6 block in production. The block has already produced 2.5 TCF of natural gas and 27 million barrels of crude oil, which have substituted over $34 billion of energy for India. We, along with our partner BP, believe in the potential and promise of India's deep waters. BP brings unmatched global expertise in deep water exploration and production to our country. We have constantly innovated over the past years to maximize recovery and sustain productions despite our KGD6 block being located in one of the most challenging geological reservoir area. Dear share owners, as you know, Reliance has a total earning before interest and taxes of 31,835 crores. Our E&P business last year contributed only 194 crores out of this 31,000 crores, which is 0.6% of our EBIT.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.